Welcome back. A 70-point decline on the Nifty. We have the mid-cap index as well, which was, moving between red and green, and now a little more in red than green, so down 15 points. But one stock which has been doing extremely good in today's trading session, and not just today, we've seen a near 170% move on this counter for the last 12 months. That's Titagarh Wagons, up around 8% today and 170% in the last 12 months. Why is that? Because as we've been talking about it since morning, a 58,000 crore order coming in on the Vande Bharat 200 train sets, and it has been decided that it will be distributed between the L1 bidder and L2 bidder, and that's the lowest bidder and the second lowest bidder. The second lowest bidder is a consortium of BHEL and Titagarh. We have with us the management of Titagarh Wagons, Umesh Chowdhary, the MD and CEO, joins in. Thanks a lot for joining in. Mr. Chowdhary, one of the things is that the L2 bidder will have to match the L1 bidder's orders, rather the price itself. What exactly do you see this as an order value coming to you? What's the revenue share between you and BHEL?
So, hi Mangalam, thank you for having me with you. So yes, this is, the tender conditions stipulate that the L2 bidder will have the option to get 40% of the order quantity, but matching the L1 price. So we've still not heard from the railways officially as to in terms of getting counter offers, etc. But if we kind of calculate the overall contract value for our consortium, it works out to about 25,000 crores, which is the way we look at it, it's a complete game changer for a company like us, because we have been the largest freight wagon manufacturers, but this makes us a global train manufacturer, which is an international quality, kind of an international standard train. So it's not only the magnitude of the order, but the magnitude of the transformation for a company like us, which has already got into passenger trains, but this will completely change the
BHEL in this consortium, sir?
Sure. So we are at about close to 55%.
Okay, so 55% is the share that you have, and the total contract value works out to 25,000 crores. That's great to hear. Congratulations, by the way. This is a really prestigious and a large order. And, yes. Titagarh Wagons, congratulations to the team. In terms of an execution timeline, what are we looking at? By when do you think the order can flow through into your own revenues? And what kind of a margin profile would you generally, on an average, enjoy with this order?
So Sonia, this the first train has to be delivered in 24 months, and the trains have to be delivered in about 4 or 5 years thereafter. And then there is a maintenance. So the maintenance actually globally is a better business to be in. The service business always gives us a margin. So we believe that on a blended basis, we should be able to maintain the same kind of EBITDA, or even slightly better if going forward from what we have guided the market or what we have maintained in the past. And the way, again, I look at it is that we are a fully indigenous consortium. Both BHEL and Titagarh are the only Indian consortium to have participated in this tender. So if somebody from overseas, with all the difficulties that the Russians have, is able to they're not here to do charity, so they would be obviously making margins. So if they can do something, we'll do better.
Okay, got that. But this is quite a prestigious order, as we spoke about it earlier. Any more such orders in the offing? Any visibility that you have over the next couple of years?
You see, the Vande Bharat is a train which the government is very clear that right now it's 200 trains that are being finalized, and there will be a total of 1,000 trains that they would like to add to their fleet. But then there is also an export market, and what we are looking at as Titagarh, and I'm sure as BHEL would also looking, is not to be limited to the Indian market alone. If with this kind of an order, $3 billion order, puts us in a global scale. So our ambition, and particularly with our presence in Europe, in Italy, we would like to then now look at, after establishing ourselves with this order, how can we really take this business global?
Right.
And that's going to be the opportunity. Of course, India will present a huge opportunity. In the next 10 years, I believe it's the decade of India.
Right. The next 10 years is the decade of India. Everyone in the world believes that. Mr. Chowdhary, just wanted to understand a couple of numbers on this one itself. What is the estimated cost of per train set? What was the difference between the L1 bidding and the L2 bidding? You said you haven't heard of a counter offer, but will you be able to match the lowest bid while maintaining the same 8 to 10% margins that you've guided for?
So yes, we've done a lot of number crunching and all of that, and so the tender also had certain peculiarities, all of which at this point of time I would not be able to discuss. But the tender said that the L1 bidder would have to assemble the trains or test them in a place called Latur. The L2 would be doing it in Chennai. Chennai has a better ecosystem, a better vendor base, and so on and so forth. So strategically for us, it was perfectly fine to be L2. And we had factored in that there would be certain cost challenges, price challenges. I would say that the prices are very competitive. They are challenging, but then at the same time, because the volume is so large, there is a 35-year service attached to it. We would be able to maintain the margins or even improve upon that, because we also must understand that this is one of the largest contracts in the world. So the entire supplier base would be kind of available to negotiate.
So, generally, and correct me if I'm wrong, generally when such large orders are given out, for execution of these orders, you may have to take on some debt, I guess. The investment would be large as well. The payouts may be a bit delayed. So, will this put any stress on your balance sheet? How are you managing the investments, and will this mean higher debt for you?
Not really. I mean, we already have the facilities. So we've already invested in our facilities. As I've always said that in the last 5 years, we've continuously invested in our facility. We've created capacity for 200 to 250 coaches per annum. Now we are enhancing it to about 450 cars per year. So it will require working capital debt, but that's something which we factor into the projections, into our workings. So it's not going to be, we are not going to be kind of overwhelmed by the cash requirement, or we're not going to load ourselves with debt owing to this order.
You said that there is an export opportunity as well, and opportunities coming in from the government itself, 5 times the initial size. Can you give us a sense of whether you have the capacity to handle that kind of magnitude? That is point number 1. And secondly, I'm just looking at the timeline of revenue recognition. You said 24 months from now is when the first train has to be delivered. 26,000 crore is the upfront payment for delivery of train sets. 32,000 is to be paid over 35 years as maintenance contract. 40% of the total orders, of which you have 55% of shares. So just plugging in those numbers, so you're likely to get about 20% of the 60,000 crore order, which is close to about 12,000 crores, but this will be over a period of many years. What could the incremental revenue, annual revenue be for you?
So our share would be about 15,000 crores, give or take. That's the approximate share of our business. But the 60% of this, 40% of that is for the train supply, and then 60% is for the maintenance. So our immediate revenue would be about 7,500 crores over the next 5-6 years. So that's on a ballpark the number. But it's, as I said in the beginning, it's not only the revenue of this contract. The dynamics of the company really changes, because we are in the big league of train manufacturers. And once that floodgates have opened, if I can call them the floodgates, the opportunity that exists is even larger than what we have got.
We have spoken to you, at least I have spoken to you over the last decade, and I'm so glad to see this journey play out for you, from a wagon manufacturer now to a world-class train manufacturer. The company has done very well, and hopefully it'll do a lot more for shareholders and for all of you folks, and for the country. I mean, this is what, as you said, one of the largest contracts in the world, and the Vande Bharat train system itself has been, such a pleasure. So great to see things going well. All the best.
Just add, Sonia, that being Vande Bharat train, this what gives us immense pride and kind of satisfaction that it's an Indian consortium that is going to build this.
Absolutely.
So, we were the only Indian consortium, purely Indian consortium. So when we call it Vande Bharat, this is right kind of giving us the pride to do that. And also to touch upon what Mangalam mentioned about the size, about the appetite to grow. So 2018, or just 4 or 5 years ago, we were a 300 crore top line company, and we were 766 crore last quarter. So we have that, we have kind of built that ecosystem inside the company wherein we can handle the growth.
Great. Both Sonia and I will say Chaiya Chaiya to that because that's the only train song that we know. Wish you good luck and wrap up on this edition of Halftime Report, Business Lunch. We'll take all the action forward. Thanks a lot, Mr. Chowdhary, for joining in.